It's a pleasure and honor to be here at this esteemed gathering, the second existing Foreign Direct Investment Roundtable. This forum is a testament to the shared commitment to both the public and private sectors to fostering a more dynamic and investor-friendly economic environment in Nigeria. And I really couldn't overemphasize the importance of multi-stakeholder engagement. And this is one of such. And I must say that it is my first one. I know there was one such last year, and I'm very happy that I was invited, and I'm very pleased I came here today. Nigeria, of course, remains one of Africa's most promising investment destinations with a large consumer base, a useful and skilled workforce, and an abundant natural resources. As the governor of the Central Bank of Nigeria, I'm pleased to share insights into the economic landscape, policy directions, and the strategic reforms being implemented to enhance trade and investment opportunities in our nation. In particular, at the Central Bank, we recognize investors' critical role in driving economic growth, creating jobs, and fostering innovation. Our policies are tailored to ensure macroeconomic stability, strengthen the financial sector, and create a conducive environment for both local and foreign investors. Today, I will attempt to highlight a few key areas from our standpoint which we believe would help investors as they strengthen their resolve, put it this way, to work in Nigeria, and in particular from the macroeconomic standpoint, the things that we believe we are doing, and we need to tell that story because, as was said earlier, I do think that in the scheme of things, it's useful to have this dialogue so people and investors can understand the issues that we are faced with and the reforms we are doing so they can be our greatest advocates. The Central Bank of Nigeria remains unwavering in its dedication to maintaining a stable macroeconomic environment, which of course is something that has come up time without number, that supports sustainable growth and attracts investment. To address inflationary pressures, and I need not say too much about the inflationary pressures we have gone through of recent, the bank has prioritized inflation control through strategic monetary tightening. This approach provides a series of deliberate adjustments to the monetary policy rate, MPR, which increased progressively from 18.5% in February 2024 to 27.5% as at November 2024, underscoring our commitment to curbing inflation. Again, to highlight the fact that, because this seems to come up quite a bit, that this high interest rate spiral is not conducive for the real sector. And perhaps that be the case, but the argument on the other side is that hopefully these should be short-term measures that will help to, of course, stabilize the economy. And as inflation starts to come down, because that is the real monster, if the populace do not have spending power, then the goods that the real sector are putting on the market, you find no takers for them. So it's important, and it is important from the socio-economic standpoint that we do curb inflation. And as I said, as that continues to trend down, then of course interest rates also will come down. With a key focus on digital transformation, the central bank is driving financial inclusion by promoting fintech innovations, expanding access to digital banking, and enhancing the efficiency of payment systems. The collaboration between monetary and fiscal authorities remains critical And the CBN is working closely with the fiscal authorities to align policies that enhance productivity, trade, and industrial growth. Again, this is something that tends to come up a lot. There tends to be a lot of anxiety, put it that way, as to the extent of which the collaboration between the fiscal and the monetary authorities exists. And I can say so much about this, but it's something that I never shy to talk about. And that is the fact that on the board of the Central Bank of Nigeria, you have leadership of the fiscal authorities represented. In particular, you have the permanent secretary of the Ministry of Finance, and you have the Accountant General, both as members of the Central Bank Board. In addition to that, on the Monetary Policy Committee, we have the representation of the Permanent Secretary of Finance. So that in itself engenders a lot of discourse and a lot of collaboration. And in addition to that, quite frankly, there are a lot of other mechanisms by which we have consistent dialogue. I have, on a regular basis, dialogue with both the Honorable Minister of Finance and the Honorable Minister of Budget and Planning, and also the DG Budget. And when they go on road shows, this is something that we complement each other on. Also, the CBN remains committed to policy consistency, transparency, and proactive engagement with investors to build confidence, stabilize inflation, and achieve a projected GDP growth of 4.17% by 2025. Yesterday, on the issue of consistency and transparency, yesterday we had the launch of the Foreign Exchange Code, which basically brought together all the banks, bank CEOs, bank chairmen, and also compliance heads of the banks. In addition to the central bank, myself, I was present, and in which we all committed to a code of ethics going forward. Because sometimes there's a tendency to think that people know. But by the time you bring the documents out and we all agree them, and I must say, similar to what you're doing here, we had extensive consultation with all the different stakeholders before we came out with the final code of ethics. And we have agreed that, signed off on it, and we, of course, will be ensuring that we work according to that practice going forward. The bank is committed to ensuring a transparent, efficient, and well-functioning foreign exchange market that supports economic stability and investors' confidence. With the critical role of exchange rate stability in fostering trade and investment, the bank has implemented comprehensive FX market reforms aimed at enhancing liquidity, ensuring price stability, and reducing distortions that previously hindered market efficiency. One of the key measures that has been the unification of the multiple exchange rate windows with a single market-driven system. This reform promotes transparency by allowing exchange rates to be determined by market forces while ensuring that foreign exchange supply and demand are better aligned. By eliminating arbitrage opportunities and speculative activities, a more predictable and investor-friendly environment has been created which facilitates long-term capital inflows. In addressing FX liquidity constraints, decisive steps have been taken to clear outstanding 7 billion FX backlogs, ensuring that businesses, multinationals, corporations, and foreign investors can repatriate funds seamlessly. This initiative has restored confidence amongst market participants and reinforced Nigeria's commitment to honoring financial obligations in a timely and efficient manner. And I will say a few comments on this because no doubt many in this room are very interested in this. Yes, backlog of $7 billion US dollars, and we have cleared the verified claims. We looked at the unverified claims, and I believe that we are at the final stages of separating what qualifies as fully verified, and we will shortly be paying out those monies that have been verified by the forensic auditors. Something told me that if there was anything I would get a clap for today, it was that. It's unfortunate, to be honest, that it has taken so long, but truth of the matter is that there were a lot of practices that went on that really should never have happened in the first place. But anyway, that said, we are going to ensure that we do what we need to do to strengthen our market and to create better trust in what you investors naturally desire and deserve. Furthermore, the CBN has introduced policy measures that encourage inflows from non-oil export proceeds, diaspora remittances, and foreign direct investments to diversify FX supply sources. Again, this is an area that we are very proud to talk about our accomplishments there because, to be frank, one of the main reasons why foreign exchange has been relatively volatile over the recent past was the fact that the supply of foreign exchange was relatively limited. And that's for a number of things. Not least, of course, is the fact that a monolithic economy where basically much is dependent on oil, there's a limit to how much you would expect to come in, and especially in a situation where the sector itself was going through its own issues and, of course, its own reforms. So in that process, the central bank said, well, how can we contribute towards the diversification of revenue? And the thing that we looked at was diaspora remittances because, of course, we have a very, very strong and robust diaspora all over the world. And we took it upon ourselves to commence the engagement process, and both outside, internationally and domestically, understood their problems, and in understanding their problems, we took away the bottlenecks that hindered progress, and we've seen gradual and significant increases in flows coming in from both the IMTOs and the diaspora community. By strengthening engagement with exporters and promoting value-added production, we aim to reduce over-reliance on oil revenues and bolster FX reserves. The bank introduced the non-resident Nigeria ordinary account and non-resident Nigeria investment account targeted at Nigerians in diaspora. These enable non-resident Nigerians to remit their foreign earnings to Nigeria and manage funds in both foreign and local currencies. While there are two of them, one is the one is a non-resident, while the other enables residents to invest in assets in Nigeria in either foreign currency or local currency. Account holders may maintain both a foreign currency account and a local currency account to facilitate transactions and participate in diverse investment opportunities. So this is something that the diasporans have longed for, and we believe very strongly that this is a game changer in terms of the remittance of flows to Nigeria. To sustain exchange rate stability, the CBN continues to enhance oversight of bureau de change operations and other FX intermediaries, ensuring compliance with regulatory guidelines while preventing speculative practices that could distort the market. Additionally, technology is being leveraged to improve FX market transparency, streamline processes, and create a seamless trading ecosystem. The focus of the bank remains on maintaining a market-driven exchange rate system that fosters investors' confidence, facilitates ease of capital repatriation, and promotes macroeconomic stability. The electronic foreign matching system was introduced in its bid to ensure transparency, fair and efficient FX trading, minimize counterparty risk, and ensure compliance with CBN regulations. The eFirms allows a minimum tradable amount of $100,000 with incremental clipped sizes of $50,000. eFirms is used exclusively for executing spot FX transactions involving the Naira against the dollar. As we advance these reforms, we affirm our commitment to creating a foreign exchange framework that supports sustainable economic growth, strengthens Nigeria's position in global trade, and ensures long-term prosperity for all stakeholders. And again, the system itself, I must say, speaks for itself. Since its introduction, we have seen a gradual strengthening in the Naira, largely because it's a very open and transparent system. You can see who's buying, you can see who is selling. The opportunity to arbitrage and play games around the foreign exchange market has been significantly reduced. The external account has strengthened with an overall balance of payment surplus of $7.17 billion in 2024 compared to a deficit of US dollars $3.39 billion in 2023. That does deserve a round of applause. That clearly shows the positive impact of the reforms. This favorable growth was primarily attributed to a significant growth in external reserves, bolstered by consistent increases in capital inflows and remittances, driven by the implementation of bold economic reforms. Again, something I made mention to, the Global FX Code, which I spoke about off the cuff a few minutes ago, and that it provides a common set of guidelines to promote the integrity and effective functioning of the wholesale FX market. The code was developed and maintained collaboratively between central banks, market participants in the private sector, and FX infrastructure providers from 20 jurisdictions. Compliance is expected by January 31st, 2025. Ladies and gentlemen, I reaffirm the bank's commitment to strengthening Nigeria's financial sector and creating a conducive environment for investment. The financial sector remains robust and resilient, playing a crucial role in supporting economic expansion and private sector growth. CBN has implemented key reforms to ensure that banks are stable, liquid, and well-regulated, creating confidence in the financial system. To strengthen financial sector resilience, liquidity management has been enhanced and the cash reserve ratio increased to ensure financial system stability. A significant focus for the bank has been deepening financial inclusion by expanding access to affordable financial services, especially for underserved populations in rural areas. Through initiatives like mobile banking, agent banking, and digital financial services, banking has been made more accessible across Nigeria. Additionally, the CBN is promoting digital banking innovations to enhance the security, efficiency, and accessibility of financial transactions. Distinguished guests, the CBN bank recapitalization policy, scheduled for March 2026, aims to strengthen the banking sector by increasing capital requirements to enhance stability and resilience. The policy is designed to ensure banks are better equipped to support economic growth, drive innovation, and foster job creation. By reinforcing the financial system, which plays a crucial role in mobilizing funds for productive ventures, the policy is expected to enhance Nigeria's financial landscape and contribute to sustained national development. The policy sets minimum capital of 500 billion naira for international banks, 200 billion naira for national banks, and 50 billion for regional and merchant banks. And let me say at this point that so far so good. We see some of the banks have already gone a long way in raising their capital, and the central bank also has verified, bar perhaps one that has come to that market, we've verified all the transactions that need to be verified and signed off accordingly. And I'm very positive that going into the future, the outcome will be a successful one. And it's good that it is coming at a time like this, because I remember when I first announced that we were going to ask the banks to bring in more capital, and there was a lot of skepticism towards that. But not many anticipated that we would go through the very major devaluation that we went through. And after that, I think the rest, quite frankly, is history. It became very clear that this was something that really needed to be done. I'm also pleased that with the foreign exchange market becoming a lot more transparent, a lot more buoyant, a lot more open, and spreads and arbitrage and illicit flows, being pushed out of that market, it now forces the banks to really get down and do the business of banking. So I'm very optimistic that going forward, we will see more interest in banks funding the productive activities. To foster a favorable investment climate, the CBN is committed to maintaining transparency, policy consistency, and regulatory clarity. By reinforcing macroeconomic stability and showing a predictable policy environment, Nigeria is being positioned as an attractive investment destination. Ultimately, the goal is to build a financial ecosystem that supports sustainable growth, enhances productivity, and ensures long-term prosperity for all. And again, like I had said at the outset, I cannot overemphasize how much we have, how much our policies at the central bank have been driven by talking to various stakeholders. I cannot overemphasize it. Understanding the problems, talking to them, dialogue, having the magnanimity to change where you think you need to try something that is more efficient and more effective, and constantly looking for what ultimately benefits all concerned. Because policies cannot and should not, in my view, benefit just one group. We've seen the outcome in Nigeria of the recent past, where multiple exchange rates had their dysfunctions and where certain groups benefited massively at the extent of others. That is not a system that we intend to follow. As we look towards strengthening our economy, we should prioritize attracting FDIs that will help boost non-oil exports, industrialization, and value-added production. Successful experiences of some countries include Malaysia, which has emerged as a significant hub for semiconductor manufacturing, attracting major companies like Intel and Macron. Factors such as solid infrastructure, engineering expertise, and attractive investment incentives have made it a top destination for FDI, especially in the semiconductor and artificial intelligence sectors, with Penang, an island region in the country alone, attracting $12.8 billion in 2023. In India, the liberalization policies of the 1990s, coupled with the growth of the information technology sector, have significantly boosted FDI in India. As of 2024, India received over $1.03 trillion in FDI since April 2000, with over 69% of inflows attracted since 2014. The country has become a global hub for technology and services, attracting investments from all over the world. Ethiopia is also another country that has attracted increased FDI following substantial economic reforms. The government has implemented policies to liberalize the economy, including transitioning to a market-based exchange rate and maintaining policy autonomy. These reforms have enhanced investor confidence, positioning Ethiopia as a growing economy likely to attract more FDIs in the coming years. Interestingly, when Ethiopia were about to liberalize, they came to us in the central bank and we had very, very interesting conversations. And I'm so happy. It's not by no means an easy task, and it's not an easy road at all, but I'm pleased that at least they've been able to summon the courage to do the things they are doing. Already, China has become one of the main sources of FDI to Ethiopia, accounting for about 60% of all new greenfield FDI projects in the country between 2018 and 2022. Yes. These countries have shown that with the right policies and commitment, emerging markets can boost industrial capacity, diversify exports, and attract substantial foreign investments. Nigeria is on a similar path, and the Central Bank of Nigeria is working tirelessly to ensure that we have the right policies in place, such as supporting access to credit for exporters and manufacturers, enhancing foreign exchange management, and fostering a robust infrastructure network. In addition, through strategic trade agreements, market access for Nigerian goods and services has been improved, building on our existing partnership across Africa and beyond. Ladies and gentlemen, before I conclude, let me just re-emphasize a number of things, especially with respect to the foreign exchange. Now, truth of the matter is that in terms of the foreign exchange market now, I've said a number of things about that. It's more open, more transparent. I hear the issues about the concerns with respect to easy entry, easy exit. That now is relatively a thing of the past. Investment is coming into the sector. Our reserves are growing. As at the end of last year, our reserve position was over 40 billion US, which was the largest number we've had in over 3 years. And let me also hasten to add, because this is another question that seems to come up time without number. The absolute number has grown. In other words, yes, we have more reserves, but also we have grown that organically. And so the quality of our reserves has also improved significantly. Next year, obviously, once the accounts are audited and published, I think all those things will be very clear to everybody exactly what the situation is. But I can assure you we are in a very good place at this point in time. Then also to say that in terms of investment, what I see from my position is an increasing interest from foreign investors, And we had some high-profile ones recently. For example, Amy Diamond, the managing director of one of the largest U.S. banks, also Citibank as well. That was Chase CEO, Chase Morgan CEO visited here. The MD of Citigroup visited here, and a number of others. And they see the opportunities here. Okay, they see foreign investors are seeing our rate, the foreign exchange rate, a lot more competitive. So while it may appear as a threat in some respects, especially for those of us who are having to deal with a situation where much of what comes in is we have very little by way of exports other than oil, and a lot of much of the goods that we have all dependent on imports, really. But it's an opportunity to diversify, and it's an opportunity for those who have been on the sideline to be interested in coming in. And I can see that interest is getting stronger. Yesterday, I spoke about a very extensive intercourse that I had with the bank CEOs over the new foreign exchange code. And after that, I addressed a significant number of foreign exchange of foreign investors who had come to the market and normally don't come at this time of the year. When they come towards the end. But this time, because they could see all the changes that were taking place, they came early and they wanted to hear the story. Similarly, in terms of when we went out to raise the 2.2 billion US dollar Eurobond, okay, in Europe, we asked for 2.2 and we were offered over 9 billion US. So the point I'm trying to make here, frankly, is that the numbers speak for themselves. The numbers speak for themselves. So you really don't need to wait for me to tell you these things. If you look around at the numbers, you'll see it's telling a different story. And typically, when that happens, what you find is that it is the smart investors that get in early. Because if you don't do that, by the time you get in, the train has moved on. So I think it's very important to mention this at a forum like this. And also, I would also like to say that one can only but continue to encourage all the hard work and efforts that have come from PEBEC, and the Honorable Minister has blazed an incredible trail in that respect. And I must say, I was extremely impressed to come here today and see a group like this all waiting quite eagerly. And I'm sure you're waiting for longer than you may have expected. I don't know. But the fact that the interest is there is not interest that is misplaced. And I think that the continuation of the very, very hard work that PEBEC has been doing must be encouraged, because it will make for a more seamless entree for the foreign investors who want to come in here, and who rightly too, because the opportunities are here. And I'm giving you the side from the macro that things are beginning to change. Some of the concerns you have had are being addressed, and listening to what was being the presentation that was being made with respect to policy and the way policy has got to be drawn up and created is all showing that the road of travel is very, very positive. And to encourage the new DG of PEBEC to say that we're fully behind you. In conclusion, by continuing to focus on these policies, Nigeria aims to unlock new opportunities for investment in sectors such as agribusiness, manufacturing, technology, and services. As we look to the future, our commitment to enhancing Nigeria's position in global trade remains unwavering. We are creating a stable and predictable macroeconomic environment that will allow investors to thrive and contribute to the long-term prosperity of Nigeria. Thank you for listening.